Good day, everybody. Brian here from quantlabsnet.com. This came in from a friend, usual source. Thanks to them for sending. This is from efinancialcareers.com. Headline: Are pure high-frequency trading firms quietly dying? Not that as we know as it may sound, but this is a response to this. So high-frequency trading firms have spent the last decade growing from industry challengers to stalwarts, with the top firms having thousands of employees and widely coveted graduate internship programs. They have a problem. The infrastructure is very expensive. My response to that is, with the latest round of AI, LLMs, models, that right there, that statement is pretty well a fancy a way to say no more. The accessible mortal can get access to this sort of stuff if you know how. I've proven it to myself and a few people all around here in private circles. And you'll see the first benefit on the report I'm putting out on the options and futures on each commodity. It's going to be pretty wild. Anyways, firms are therefore taking inspiration from hedge fund competitors and slowing their strategies down. I think with what I'm putting out, I'm in the same camp. I could go ultra low latency if I wanted. Just comes down to cost as a set here, and that's for the data, and that's for the network infrastructure. The cloud technology can change that, but you still have to pay to play for the access, and you can choose data centers that are right next door, physically most likely in the same building as a lot of these HFT firms are in. There's quite literally hundreds of firms that do HFT trading to some capacity. Now, this is important to know where this guy's from. Hong Kong-based quant headhunter, speaking anonymously. There's also an increasing number of firms opting for slower trading strategies. They're doing so because it's becoming increasingly costly for diminishing returns, very true, when trying to reduce the latency. Due to an excess set of firms of pursuing similar, simple, low latency strategies, because a lot of people are watching the same thing that everybody else is. There's not a lot of, there can be still some secret stuff out there, but you would like, the way things can be done now and the pace of it, it's just, everyone can find the same thing. Recent study from Beijing, Shabtong University tested high and low frequency algorithms on historic data on the Shanghai Stock Exchange, found that HFT algorithms had an annual return of 28.5% compared to 22.7%, but found that the sophisticated infrastructure costs hampered long-term comparative success. Yeah, I could see that. And that's also not including, especially if you're going through retail, the cost of the commissions from your broker, your exchange can be very excessive. So the study advocated using a mixture of both algorithms instead. A London headhunter focused on build up new teams. Again, with the new teams, I think now the direction is going to be basically another new team of AI. It's so sophisticated now. I don't know. We're literally on the edge of AGI coming out, artificial general intelligence, and that's going to be the first wave from ChatGPT 5. I've seen the results of ChatGPT 4.5, and I still think the DeepSeek's the leader there, along with the QuackQ WQ for both coding and scientific related, meaning science, math, and all that. So more hints there. Told us that many of the major firms have been building out mid-frequency trading capabilities for a while. Spend a lot of money, have excess capital sitting around, and are ready to spend it. Conversely, hedge funds have been hiring more people from HFT to increase their capability and execute faster, but most traditional funds aren't true high frequency yet. Now, from if you've seen my 5-hour video on YouTube I posted a while back, you'll know that the best paying are going to be both the U.S., specifically obviously Chicago, New York, and London. So more of the interesting things, because I guess they can afford it in London, Hong Kong, Singapore, they don't pay as well. And it's seem to be a different mentality over there. But I think a lot of the innovations coming out of those regions, like in Asia. So watch out for those. But not to discount what can be made in both UK and Asia, let's say. And of course, the US is innovating as well. But both industries have reputation for eye-watering pay. There's a lot of people out there who won't get up until they see $1 million minimum on their base pay. And there's a lot of people that are capable of doing it. Headhunter says people aren't necessarily moving for the money. Instead, the appeal is building something new. It's appealing because it's a challenge, easy to measure, and you have ownership of it. It's usually harder for someone in HFT to transition to a high-frequency firm in a hedge fund. They're more regulated and less nimble, so getting stuff built is much harder. On my blog, there was a video I posted of some guy coming out of aviation as an engineer going into prop shops in Chicago, talking about the specifics of how a lot of these smaller HFT firms are running. So what that means is they are basically more nimble, as it says here, and they're in a prop shop environment, so they're not as regulated. One job I did see that would be a large one is D.E. Shaw. And if you want to know where Jeff Bezos comes from, that's the firm that he started in. He moved up and he was kind of mentored by, I'm not sure if it was a founder, but it's an interesting firm to learn about for this type of work. Again, that's D.E. Shaw. One of the most notable algorithmic trading lower frequency is Jane Street. We've talked a lot about Jane Street, Citadel, on their pay. Their language of choice, I think, is OCaml, or I can't remember what the language is, but that's all they use. But they're interesting because they are innovative in a lot of ways, just not using C++. Still, we'll get in that in a minute. Jane Street has been known to hold positions for days at a time. Hudson River, another big high-profile firm in New York, also does the same work in high-frequency trading as well as mid. HRT hired a guy, Max DeWard, from Citadel in 2023 to work on strategies across the FICC and macro spaces. Has been operating mid-frequency commodities since at least 2020, hiring interns for the team. Now, with what's gone on in the markets this week with the tariffs and the steep drops, I'm kind of fortunate, but I did see this coming, that I knew that a lot of the, when they say commodities, obviously that's going to involve mostly futures and options around those commodities. My thing will track about 40 plus US centric commodities plus retail forex and crypto, what's available basically on the CME. And as you dig into it, you learn about the behaviors of how they're working. And other videos I've seen, they have said that there will be another new super cycle of commodities coming. And I am seeing that as well, both in single stocks as well on my analysis. It just seems to be, everything's all been filtered out, even though the market's been kind of crushed really bad. There's just some companies out there that have paying good quality dividend, and I have to look at them individually, but I'm sure there's some winners, and quite a few of them are in the energy space. Chevron was one of them. I haven't looked at it, but that's one of the name brands that we're talking, but they may start to move ahead over something like big tech, just as an example of what to look out for. So continuing along, for HFT firms with established MFT teams, new fascination is deep learning. London Headhunter says successful firms are making the most P&L by applying machine learning to trading. Jane Street and other major players like XTX Markets have been building out their machine learning capabilities, while even more niche HFT firms like Radix assert that trading based on sheer speed and execution may have reached its limits. Yeah, I agree with what's being said here. The AI is now so accessible if you know how to look, know where to find it, know how to code it up. Look, there's going to be now, I think since December of 2024, we're at a point now where we're now got this new thing called a combustible engine. It's that kind of event where AI is so prevalent now in pretty well everything, but namely in this space. And I've seen some videos of some of the older guard quant guys saying, machine learning doesn't work. Maybe it's because they're, I don't know, they don't adapt, they don't, I don't know what's going on there. But I can assure you that with the latest generation, and it changes every week, every month, there's something new coming out, a new iteration, and it does work. Okay, I put a little YouTube short on the specifics on what I'm seeing. The code that I generated 2 months ago, I'm now getting the newer AI to rewrite it in a much cleaner, much more structured manner. And as I go deeper in the research here, as it says, it will generate better, insightful code. And you get better, insightful output as well. It's deeper. Now, the thing is, can you go out and learn the machine learning itself? I don't see a point in that anymore. It's like if you're an engineer and you get in a car and you turn the engine, the engine turns on, do you go sit there and say, oh, golly gee, maybe I should learn how that works and how the machine, and take it apart? There are people that will do that, but the world of trading, to be a trader and benefit from it, you shouldn't really care about how it works, as long as it works. That's the key point. The results are valid. What you care about as a trader is to benefit from what the AI gives you and the code that you can generate from it. As I say, going back to the combustible engine, when the Model T came out, there were still those people, what we can call the horse and buggy crowd, that will never adapt to these new innovations that can revolutionize so many processes and so many industries, and AI is definitely one of them. My point here is, don't be left behind because of the results that you can get from this AI stuff. And your trading results may show that, especially in this latest market with the surprise tariffs that we just got, and you saw how deep the markets fell, and that was not planned, that was not seen. The question is, will the markets recover from it? We don't know with all the national debt. Nobody knows, but it is a algo trader's dreamland to trade in these environments. When you look at how the returns of some of the crypto and some of the currencies got you just within the 24 hours, it's pretty crazy. Knowing that, and that's where you need to focus on. Remember that, and you can use the AI to develop your trading ideas, your trading models, and the resulting code that comes with it. And it can be as complicated as you want. I'm now at a point where I can put in a query on a post, and it will automatically generate a Java script React application for me, or an appliance, I guess I call it. I mean, it's pretty wild what I've seen and what can be generated here. But I'm not obviously going to sit here and spill the beans on it. And a lot of people expect that. It's like, no, you got to be able to maintain your edge, trader's edge. Because once the trader's edge is out, then it's done. And then you go looking for the next one. And the less you'll be talking about it anywhere online. And the HFT shops have shown that for many years. But they're probably using the same stuff we're already using. Anyways, coming back to this. Regarding these firms, we're at a point now where I think people on their own have the resources through this AI to get to their point, to get to the same point they're at, and probably come up with better results. And they don't need to find, we need to work in these firms. So it's getting more accessible here as well. That's all I'm saying there. Okay, so let's talk about the languages. The shifting focus to lower frequency means a different sort of skill set is required. HFT platforms are typically coded in C++, widely recognized the best performing language for speed. MFT may open the door for using languages like Rust and Python, Java, But the headhunter says each firm has its preferred language of use, and adding MFT strategies won't change that. MFT is also a lot easier to do than HFT in Python. Hooray, hooray for that statement. A language loved in hedge funds, especially as AI increases in its prominence. Okay, so C++, the one thing I'm not a big fan of is everything has to be built. All the dependencies, you have to be very specific. What happens if certain libraries across the board don't play nice? It's just a hornet's nest. Now, if you're moving down to something like MFT, medium frequency trading, that's a different game. And you can develop faster, easier, cleaner with Python, especially with the AI. One thing I'll say on the GUI on the front end is JavaScript still dominates. The problem I have with JavaScript, it's like a hornet's nest of coding that of just ugly code you don't want to deal with. I just find from playing with both the C++, JavaScript, and Python, I still prefer Python on the front end. I'm going to have a big surprise for you from the good folks at Lightning Charts, some advanced stuff that they've got, all done in Python now. And I've talked to many of the leading charting package companies, and they only support right now .NET, C#, and JavaScript. This is the first time over the last however long they've been at it that Lightning Charts does support Python, and it's great for people like us because it's very hard for us to want to move off of Python because it's so easy, it's so fast to code something up, and it's very easy to pick up something very quickly in Python. And I'm not against C++. I just find it very complicated to work with. Whereas in Python, you can do a lot more in a shorter amount of code. And even on the front end, it's just as good as JavaScript itself. It's just if you have to deploy it, it is a kind of a pain in the ass. But with the AI, I'm learning that yes, you can do everything all in one Python script. I did put up a little 40-second video of something options trading with an option chain. That's all simulated because I can't afford the $4,000, $2,000 a month for that type of data. But I just got an AI to virtually generate that. It took a while. Actually, I had to go through 3 separate LLMs to get that coded up, but it was accomplished. There were some technical challenges on it. I did put up the technical on how it was generated. And when you look after all the revisions of it, the code got simpler with all the technical, and the AI, as you iterate through it, which took about an hour, maybe 2 hours to get it to that point. That is very difficult to do, but it was done quite geniusly with open source. Everything's all open source there, and it can be done. It's shown it can be done. I just got to know how to prompt it. So there's that 30-second, 40-second video. It's really powerful what it can be done there. Anyways, let's go on here. So a couple of more paragraphs here. I think this is important because this is what I use to get industry insight on what's going on in the firms and what's going on the recruiting front. But I think, as I said, with what's happening in AI now, it's really radically changed. I think it's the concept of hand coding, manual coding. Yeah, like that's done. I saw some stat: 90% of all code this year will be generated by an AI, and I believe that from what I've seen, from what I've proven now recently with that one little option live trading virtual 3D with the option chain table live, and it was streamed into to that generated as well using Flask, and but as I said, the technical is all there. Just got to find it in the description of the video. Anyways, the Hong Kong headhunter said that hedge funds' interest in HFT varies on how much they're willing to invest. Again, the cost of the AI now is so cheap, radically cheap, and and it's going to get cheaper as the competition gets more fierce, especially coming out of China. I don't know what they're doing. I don't know what's in the water over there, but man, what they're pumping out is unbelievable, and the results you can get in a very short amount of time in clean code. It's impressive. Anyways, they have to overcome the incremental costs associated with adopting infrastructure and hiring talent to build out various strategies in that space. To me, right there, that statement is from somebody who does not do the technical, who does not work with this stuff day to day like I have been for the last 3 months. That statement in itself is so outdated, so invalid. What I come up with what I say today will be outdated within a week, the way these LLMs are competing against each other. But the point is that it's so cheap. In terms of infrastructure now, you don't need to go out and buy out all the physical hardware of NVIDIA. You don't need to go out and buy the virtual servers and do all the networking. It's all done through the cloud. As I've said before, when you look at a company like Vultr, and what they're doing and the cost and the technical and what you can get for it, it's mind-blowing that you can use that cost of infrastructure, spin up your server, put in your cloud infrastructure in Chicago, in New Jersey for the New York, in London, in the Equinix data warehouses. You can get access to all of this. I mean, there might be a wall of separation. I haven't looked into it, but the cost of infrastructure is there, but it's so much easier now because you can just focus on the code. Okay, and again, with the hiring talent, which I've just gone over, you don't really need to get to that point because the AI is there to be your friend, to be the team that you want. It's there, it works, and you have the ability to now co-generate things so quickly. It's mind-boggling. Okay, it's not uncommon for firms to get cold feet. Low latency FPGA teams are thought to be particularly susceptible to being dismantled as the costs rise. Again, the FPGA coding can be done through these LLMs. Okay, I'll just leave it at that. Do they work? I don't know. Are they valid? I don't know. But you can iterate it to get it to a point now where it does the reasoning for you, the debugging for you. It can go out and get you initially set up for the coding. The problem I see with the AI, and this is where the coders need to really know their stuff, with the complexities of what you generate, when you run it for, let's say, a couple of days, a week, a month, whatever, you're going to have runtime errors. And if you don't know how to debug those errors, you can't just run it through an AI and just expect the AI to fix it for you. Because then what it suggests, it will have further knock-on effects and will make that code useless. So you still do need to know the coding inside out and be very good at it, and same with the math. But all I'm saying is that you now are able to generate it very quickly, very fast, and the results are pretty mind-boggling. Okay, so the cost is no longer a real concern. The only cost you would have is the cloud and the cost of access to the LLMs, and it's so low, it blow your mind. As a scope of HFT firms beyond pure latency, it's hard to argue that many of the top firms today are still pure HFT, meaning that they are becoming, in the next few months, horse and buggy, okay, if they don't adapt. And I'm sure they are, but the people that they have on staff now, the $500,000 folks, I just don't know. Can they be replaced? I don't know. I don't know their capabilities, but I can assure you AI is coming, and it can probably do something much better and cleaner and more advanced with better results than they can think of, because the AI is getting that so advanced. It's, as I said, it's so mind-boggling. So it's another major HFT will arise in what is now an oversaturated market. As I said, in terms of the oversaturated market, I agree with that. Also agree with more and more people that get accessibility to this type of technology, being able to co-generate, being able to come up with ideas. It will get crowded in that space. Where you will shine is the ability to come up with the right trading ideas and seeing what moves faster as well, because that's going to be your trading edge in all of this. Okay, so I'll leave it at that. This is an interesting point we're at now in this space. And everything's slowing down. Other things are speeding up. The markets are radically changing, so the market regimes shift as well. Other than that, I'll leave it at that. But if you want, always, as I always say, if you want to know what I'm doing, I'm going to be bringing out some pretty different things. I will probably showcase some of the results. I've already shown my first example of what's capable with AI. But just to follow along, always make sure you join the newsletter. Get my ebook, the C++ HFT. TradingView is still important. I just want to make sure people understand that. I think TradingView is getting pretty interesting to look at stuff, but I do think with what's coming in the charting area, as I named earlier, they are coming up with some interesting things that will be kind of like TradingView, but the capabilities are who knows what with because you own your own source code and you have full control over that. Whereas opposed to TradingView, you are limited in so many ways on the moderation, on the code that you want to put out there for public consumption, blah, 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 blah. So, that's going to be an interesting area to watch, but it's still very valuable in what they put out. And I think they're an important factor in the trading space. They are getting more dominant as well. But this AI thing, along with capabilities of what's coming out on the front end, will set TradingView back as more people are able to build out these systems quickly and properly. As more charting companies, like I mentioned, take advantage of that, and namely to support, as I've said here, something like Python, because Python, it's very hard to move me off of Python. As I said, I can generate both C++ and JavaScript now, but for me to pick it up and reverse engineer it fast and integrate it into something else, Python's the way. Anyways, I'll leave it at that. Join the newsletter. Thanks for watching, listening, and all that, and I shall talk to you later. Bye-bye.